Well, Mark Zandi is the chief economist and co-founder of Moody's economy.com, a leading provider of economic research, data, and analytic tools. He is also the author of Financial Shock, Global Panic and Government Bailouts, How We Got Here and What We Must Do, or what must be done, to fix it. He joins us now from Westchester, Pennsylvania. Welcome to you, Mark. So I guess the key question here is, will the new home sales numbers hold up when this tax credit expires?
No. The current strength is due to the tax credit, good weather, low mortgage rates. This is data for March, so this is before the end of the Fed's credit easing effort. So I think in the summer, fall, sales will be weaker than in the next couple months because of all these forces and factors.
Okay, so if we had this stunning 26.9% month-over-month increase, what would be a realistic percentage month-over-month for April?
Well, April will be strong as well because that will still benefit from the credit. It's really going to be when we get into June, July, August, and I think underlying new home sales are probably running around 350,000 annualized. So I think that's where we're headed after the credit. Okay,
so inventories of new homes have come down. Economists such as yourself point to this as another very bullish factor for the housing industry. So that's encouraging, but we're still seeing this high rate of foreclosure. So how much is an offsetting factor is that latter issue, again, of foreclosures?
Well, if you're looking at construction, housing starts, the low number of new homes for sale is a really good sign, and I think by this time next year, we'll start to see more construction. Single-family construction will start to pick up. The foreclosure numbers are very important for house prices. And I think we will see more foreclosed property move to the market later this summer and fall, and foreclosure sales begin to rise. So I think we've got another 5% or so decline in housing values ahead of us in the next 6 to 12 months.
So the
but again, by this time next year,
won't lead to higher prices. Sorry to interrupt you.
No, I was just going to say, when you add all of this up, it sounds a bit confusing. But when you get to this point in time next year, I think the housing market will be on sounder ground, and then we'll be off and running. But we've got another 6, 12 months to go.
It's encouraging, right, too, that the Federal Reserve, of course, wrapped up its mortgage-backed securities buying program, that we didn't see a sharp rise in mortgage rates. Is that going to drive new buyers into the market as well?
Yeah, that's a good sign. They are up. If you go back to March, the fixed mortgage rate on a 30-year loan was south of 5%. Now it's definitively north of 5%. But, we're talking 25, 30 basis points. So that's not too bad. So that is encouraging. My sense is that mortgage rates will continue to drift higher. And as homeowners, home buyers see that, that will be an impetus for them to buy before they move too much higher.
So when you say drift higher, well, mortgage rates, I believe they're just over 5% right now. They'll sort of stay in that 5 handle, to use the jargon, I guess.
Yeah. Well, if I were a betting man, I'd say that by the end of the year, the fixed mortgage rate will be between 5.5% and 5.75%.
All right, so sales, as you pointed out, are still less than a third of what they were during the boom years, about half of what they would be in a normal year. I know as an economist you look closely at the job market, too, is another factor. So how important is it for we to get a firm rebound in job growth to also aid to the health of the housing industry?
Well, good point. Vital. I mean, I think if my forecast or view that the housing market's going to gain traction by this time next year, if that's going to come true, it is dependent on the idea that the job market's going to continue to improve. So we're going to go from very modest job growth right now to substantive job growth by this time next year. Substantive in the sense that we're creating enough jobs that unemployment starts to come down. If that job outlook is wrong, then the housing outlook isn't going to be nearly as good.
Yeah, those two always tied together.
Sure.
Our thanks. Mark Zandi, the chief economist and co-founder of Moody's economy.com. Have a great weekend.
Thank you.